Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I am going to look at one dividend king. But before we do that, I want to share with you guys what is happening in the stock market right now. So overall, it seems right now we are coming out of bear markets and possibly going into some sort of a bull market. Now, no one knows what's going to happen tomorrow. No one knows what the stock market is going to do tomorrow. But the thing is, right now, when you look at the stocks that's been up, so yesterday, this is what the stock market looks like. The S&P 500, these are basically the 500 biggest companies in the United States. And it kind of gives us an idea of what is happening in the overall markets, okay? Because they do represent almost every sector. When we look at it for the 1 week, it even gets better. Everything is green. Now, I said everything, but majority of these companies that are in the green or have gone up so much lately are the technology companies, especially the semis, anything to do with AI, some of the communications, and as well as the consumer cyclicals like Teslas and so on, that kind of followed up. Some of the healthcare has also done well, okay, but oil, industrials, REITs and all of that stuff have not done well. And obviously the banks are just kind of recovering from what they went through recently, okay. Consumer staples have not done well at all lately. There's only one or two companies that have done okay. Now looking at 1 month, okay, it gets even better. So majority of the companies that were green are now in the green, 30 something percent, 40%, okay, 20% almost, 42% for Adobe. This is stock since I think it was just waiting for me to sell it. The moment I sold it, it just got up to the moon, right? But again, it does happen, these things, okay? Look at everywhere. Like, for example, S&P Global, a company that I had in my portfolio for a while, and it was down quite a bit, is now gone up 11.5%, which is good for me because I've been buying when it was down. Some of the industrials are doing okay, okay? UPS is recovering. UNP is recovering. So for the basic 1 month, it looks like this. Let's have a look for the 3 months, what this looks like. It gets even better for the technology sector, the consumer cyclicals, and the communications. Everyone else, apart from one or two outliers in different sectors, they look all right. Some of them are down, some of them are okay, some of them are flat, and so on. But still, technology has done absolutely amazing when you think about this. So although basically everyone is saying, oh, the stock market is going to the moon or whatever, there are still opportunities within these sectors that we haven't looked at. The cyclicals have not done well this year because people are worried about cyclicals. Basically are like the companies like in the industrials and so on that have products that we don't need every single day. And when recessions happen, those products basically no one buys them. No one is going to buy a Tesla basically if they can't feed their family, right? But you will buy a Tesla when they basically everything is going to the moon, everything is great, like you have a job, your family are taken care of, your job is paying you more every couple of years, they're increasing that salary, whatever. So when the economy is booming, these companies do tend to do well. But right now, it's the opposite. Everyone's still worried about recessions and so on. And the fact that the Fed came out this week and just kind of said, you know what, we're going to skip. We're not even going to pause. We're going to skip the rate, basically hiking the rates and the interest rates was kind of a good news. But the markets are now saying, people are now saying, because he's skipping this, he might just skip the next one and then never basically hike it again. Is that a possibility? It is, but I don't think. And basically, remember what they're trying to do. These. The Fed and basically the UK, anywhere basically in Europe, in fact, they actually hiked it again. What they're trying to do is bring down inflation to 2%. And right now we're looking at about 8%, 10% also. So until it gets to 2%, I wouldn't actually say we are in a boom market or whatever. I'm just going to dollar cost average every single month and keep doing what I have been doing for a while, okay? Where the markets are up, whether they're down, I'm still buying good quality companies that I know I can hold for a very long time. And every single stock in my portfolio falls into that category. Maybe one or two, okay, might not fall into that category. Maybe I'm just doing like some sort of a dividend play, whatever it is, right? But majority of the companies have a quality business. They've been around for a long time. I know they're going to increase their cash flow. I know they're going to increase their dividends. A lot of them are dividend kings and dividend aristocrats, which basically means these companies have not cut their dividends for a long time, and they will continue to increase. And as you can see, there's now a lot more things are a lot more in the green. Like right now we're up about 7%. It was not long ago that we were 1% up, and these things do happen. It changes, it fluctuates. For the first time, basically the portfolio is now over £36,000. So keep dollar cost averaging. Don't listen to the noise. Focus on buying quality companies. You'll still find them, and if you can't find some, then focus on the ones that you own already and then dollar cost average into those. And that's exactly what I'm going to talk about today. So the company that I want to talk about today is Procter Gamble. This company has been in my portfolio since I started. I think I bought my first share like almost like the first week or second week when I started, because one of the things that I was doing when I first started was following people like Warren Buffett, and you've always said basically make sure you're buying companies, and obviously Peter Lynch as well, buy companies whose products is basically you understand and use every day. I use Head and Shoulders every day, and I thought I'll do that. And my wife uses all the basically washing powders and all the stuff that this company owns. Okay, we use it at home. Every single one of these products you've seen in your household. So I started with this, and I start buying every single week, just like every single month, one share here and there. And then it got to a point where 2021, around September 2021, it was just going to the moon, and the PE was ridiculous. I didn't think it was basically good buy at that time, so I just stopped buying it, and I haven't actually bought a single share of this company for a while. So what I want to do today is I want to go over the financials and tell you what I'm going to do going forward with this company. If you haven't joined us on the Discord already, please do so, because it does really help the channel. And then you actually basically will be able to join us on the Discord, where some of the brothers and sisters in there are sharing good practice and asking questions to each other. Okay, right. So now going back to the company, year to date is down 2%. For 1 year, it's actually up about 12%. When you look at the 6 month, it's actually only down up just below 2%, 4% down for the month, and that's what attracted me to the company. I thought, okay, let me have a look at it now. It's been down about 4% because it hasn't come down that much for a long time. And the last 5 days, obviously, is up a little bit. So this is one of the companies that, when you look at it, it's a consumer staples. It's been around for a long time. They sell a product basically that we normally just buy without even thinking about. Okay, more or less essentials if you think about it, and they have pricing power. So if we end up in inflation, you're going to end up buying their product regardless. If you need basically nappies for your child, you're going to go and buy their product. Okay, you might buy the branded, the store brand, whatever, but majority of us will probably end up their product, and we wouldn't even notice the fact that they're increasing their prices. And that's exactly what this company and companies like Unilever are doing right now, because they realize inflation is hitting them hard. They actually and supply issues and all of that stuff, they're passing that to the customers, so we end up paying for more for these products, so you wouldn't even notice. And for that reason, the company hasn't come down a lot. When you look at the forward PE of 25, it seems very, very high to me. Okay, and it has been like that for a long time. And the reason I want to look at it today is because I haven't seen this company come down much lately. So I'm just thinking, is this a normal thing? So I want to go over the financials now. Okay, so let's start with that one first. Okay, as you know, the company obviously is in consumer staples. $148 per share is where the price is at right now. For the last 5 years, the company has returned basically almost to 100%. Okay, EPS, we're looking at about $55.74. Market cap of 345 billion. So this is a huge company. This is not one of those small kind of companies. It's been around a long time. They grow their business organically, as well as obviously acquiring other businesses. Okay, so they do a lot of acquisitions as well. Okay, economic moat is basically wide, which is basically means they have a competitive advantage, which I really like. and beta is very, very low. This is why the company doesn't even move. When the markets go to the moon, it stays there. When it goes down, it stays there. It's a very stable stock, if you like, and that's why I love having this company in my portfolio. But now it's time to look and to see if I need to add to or get out of this completely. P, like we've already seen, basically the forward P is about 25, current P is about 25, the 5-year average is actually 24 almost, okay, and the price to free cash flow we're looking about 30. So based on this is like, okay, the company's kind of trading where it's been at in the last basically 5 years. And when you look at the sector, it's about 24 PE. So it's not far off where the sector is currently. So that whole sector seems a little bit too expensive right now. This is where the company shines, okay, from dividend side of things and free cash flow. So 2.5% of dividend, which is really huge. The payouts are only 64%. Normally we say we like anything below 50, 60 or whatever, but right now it's 64. But I do think this company would be fine. I don't think this company will ever cut their dividends for the next, I don't know, maybe 20 years or whatever. Latest increase about 3%, and then 5-year growth rate of 5%, which is decent. Okay, it's not huge, but it is okay. The dividend growth rate, we're looking at about 66 years. That means this company has increased their dividend for 66 years in a row without cutting. Whether there was a recession or not, this company has increased that dividend, which is absolutely amazing. This is why I love this company, and it is so reliable. Okay, annual payout, we're looking at about $3.76 for every single share that you own, and dividend safety of 99%. So there's no issues with this company cutting the dividends anytime soon. When you look at free cash flow, they have $12 billion. So that's very healthy for a business like this. Business that are over $300 billion market cap, $12 billion is enough for them to do the things that they want to do, increase that dividend, buy back their own shares, and so on. Free cash flow right now with a yield of 3.5. Normally we're looking at about 3%, so that's more than that. And free cash flow margin of 15%, which is absolutely huge. In terms of profit margin, is really good, 17%. Operating margins of 21%. Return on equity 31%, and total return in the last 10 years we're looking at about 9%. Return on invested capital, we're looking at about 19%. So this is absolutely amazing. That means that the company is doing really well. The management is actually managing this business really well, and the cash that they generate. And the revenue growth, compounding annual growth rate in the last 5 years, we're looking at about 4.2, which is, again, for this type of business, very, very stable. That's absolutely fine. But the current ratio is below 1, which is a little bit worrying. But I know the company has a lot of cash in hand to actually do if they use that money if they need it for something else. Okay, so they do have enough cash right now, assets that they can liquidate for the next 12 months hopefully, to be able to pay off any basically debt that they need to settle or liabilities in the next 12 months. The next thing we're looking at is the evaluation side of things. So next year they expected to grow their earnings about 9%. Okay, and then after that, every year for the next 5 years they're expecting about 5.38% growth. Now when we look at Seeking Alpha, if we go to earnings and then click estimates, you can see the EPS here. Okay, expected to grow about 1% this year, the next year 8%, and then almost 9%, then about 6%, then about 4%. So they are growing that revenue. So it's going from $5, okay, $5.88 to $7.70, okay. But again, let's just look at the first 3. So in the next 3 years, there's absolutely no issues of this company growing that top line, okay, the EPS. And the same goes for the revenue. So from $81 billion to, if we just look at the top, to 88 billion, almost to $89 billion. So that's about 4%, 5% growth estimates. Again, this is the estimation. Anything can happen, anything can change within the next whatever months. In terms of Morningstar valuation, they're saying it's $129 per share. They have been saying this for a very, very long time, which is kind of what put me off. But right now it's about 14% a premium. That's according to them. But when you look at the Simply Wall Street, they're actually saying it's about 153, about 4% upside. And then Tip Rank is basically Seeking Alpha, more or less the same, $165 per share, $165 per share. That's basically what they expect, about 12% upside from where it is right now. And Seeking Alpha is actually, an analyst is saying it's actually buy now. No, when I talk about analysts, I'm talking about the Wall Street. Okay, if you go to ratings, what you will see is the Seeking Alpha analyst is actually saying it's a hold, and Wall Street is saying it's a buy, and their software is actually closer to a buy if you think about it. Okay. So yeah, that's where the in terms of valuation is. In terms of Sharia compliance side of it is absolutely healthy, and this is one of the reasons I actually like the company. Their interest-bearing debt, interest-bearing securities are almost non-existent, and the fact that the business is actually selling products is that are absolutely fine. In terms of buying back their own shares, they are buying back their own shares, which is absolutely amazing for investors like myself. So that is the company that I wanted to talk about today. So I'm going to show you now what I'm going to do with this company, because if you think about it, if you look at the PE, it seems really expensive, but then when you look at the 5-year average, you're like, okay, that's not bad at all. And even if you go to places like simply Wall Street, when you look at it, it says looks reasonably valued right now, okay, based on the 5-year average, their PE. Okay, so you can see, there we go, okay, so the 5-year average is basically 23.9. right now it's 23.8, so it's fairly valued according to them. And then obviously if you want to use the dividend yield, which is basically some analysts actually use, is 2.51, and the 2.55 is the average. So there's not much of a difference. So in terms of, it looks reasonable. So what am I doing now? I've had the company in my portfolio for a long time, and yesterday was the first time I actually decided to add to it. After doing the research that I've just shown you, looking at the company in overall, everything they do in the basic projections for the next few years, I don't think, unless we have a massive crash, I don't think the company is going to come down massively. And it hasn't, because that's the other thing. So I've been looking at the charting for 1 year. The highest it's been, I think it was 156 at some point. There we go. 156 basically May this year. And then it obviously has come down quite a bit to 140s, and it's about 148 right now. So that's the lowest it's been for a long time up. Okay, before then, it was last time we hit this was basically October of 2022, when all the stocks were basically very much down. I wish I bought more at that time, but I did buy some stocks at that, some shares at that point. So I've started buying again, and I'm only gonna do a little bit here and there, just buy a couple of shares just to kind of build this, because I want this company to be at least 5% of my overall portfolio, inshallah. That is my main goal. And right now, as you can see here, yesterday I bought one share for £115, and then I've added another £34, which was 0.3%, 3 shares, fractional shares of this company. So I'm going to continue dollar cost and averaging into this company, and I'm going to hold in for the very long time, and I want to make sure at least this company is at least 5% of my overall portfolio, because right now if you look at the top 10, it used to be around here, but it's no longer there, because I've been adding money to all the other companies apart from this company. It's only 2,400 right now. And when I started this portfolio, it was one of the early companies. Right now Microsoft and they were actually around, I bought them around the same time, and Microsoft is right now 4,000. A lot of that is because of the gains, but I've not basically kind of neglected that company. So I will be buying more of that, inshallah. Again, just do your own research. Don't follow me. It seems a little bit expensive, but I'm happy to buy and nibble just a little bit here and there whenever I get the chance, inshallah. I didn't even know, by the way. I just realized Broadcom is actually now my top holdings for this portfolio, which is absolutely mad, because I have not added a penny to this company. Right now, 2,250 something pounds, and it keeps going up. I don't know what is going on with this company, but you know what? I'm happy with that. Anyway, I'm going to end the video here. It's a bit too long. Have a wonderful day. Assalamu Alaikum.